Slick back.
No, slick back.
That's what I said. Slick back.
No, nigga, I'm a pimp named Slick back. Pimp named Slick back. Pimp named
Slick back.
Nigga, are you deaf? I'm a pimp named Slick.
Hi, my name is Kimberly. The company that we had chose listed in Bursa Malaysia is Axiata Group Berhad. Based on the extracted audit report, we identified that the type of report is unmodified because the report is standard unqualified report referred to ISA 700. This is because the auditor's opinion concluded that the financial performance is free of material misstatements. All statements in the financial had ended in accordance with Malaysian Financial Reporting Standards (MFRS), International Financial Reporting Standards (IFRS), and Companies Act 2016 in Malaysia. There are also no circumstances requiring an additionally explanatory paragraph or modification of the wording in the report. Lastly, the auditor concluded that the financial statement gives a true and fair view in accordance with the applicable financial reporting framework.
Hi, my name is Safi and I'm going to take part to present about the subsequent event, contingent liability and commitment for Axiata Group Berhad. For this part, one of the subsequent event of the group was for dividend. In respect of financial year ended 31st December 2022, the Board of Directors had declared a tax-exempt dividend under single tier of 5.0 cents per ordinary share of the company amounting Ringgit Malaysia 458.9 million to be paid on 38 March 2023, which on the next financial year. For contingent liability, it related to Robi Axiata Limited tax positions. Since the last disclosure in the 2021 audited financial statements, there is material change in the group's contingent liability that makes Robi potential exposure increase from RM 133.2 million to RM 146.4 million. Given that the remaining disputes item are consistent with prior year, based on the external legal advice received in the past, the Board of Directors are the view that Robi has good prospect of succeeding on the remaining claims. Lastly, the commitment for Axiata Group Berhad. The group has operating lease as a lessor and lease out its telecommunication towers, sites and network equipment. The group classified this lease as operating lease because they do not transfer substantially all the risk and reward incidental to the ownership of the asset. The total amount of the commitment in respect of lease payment to be received for 2022 was RM 6.9 billion ringgit.
Hello, I am Ellyvier, going to set out reasons why subsequent events need to be disclosed to the financial information users. Subsequent events are the events that discovered by the auditors after the date of auditor's report but before the financial statements are issued. This is to provide the most up-to-date relevant information about the company's financial position. The users will be aware of the transactions that occurred after the end of the accounting period and provide information about conditions that existed at the balance sheet, as this give impact on the financial position. It is necessary for deciding which event should be recorded during the current reporting period and which should be recorded in the next reporting period. Next, contingent liability and commitment should be disclosed as it represents encumbrance of potential and material amounts of resources for the future periods that can affect company's cash flows. Disclosing them helps stakeholders assess the risk and uncertainty which can influence their perception towards the company's financial stability. This not only gives the users complete view of the company's financial strength, but also promoting company's accountability and trust. This also helps users when it comes to considering and analyzing the future performance of the company. One of the account balances that is significant to the company is inventories under the current asset, which we chose the suitable audit assertion for it is existence. Meanwhile, classes of transaction that's material to the company is revenue, and we chose occurrence as the most suitable audit assertion for it.
Hello, I'm McAllister dari Sakau, Anak Trevor, and today I will be presenting about the audit test procedures for inventories under current assets in the aspect of audit assertion, which is existence. There are 8 audit procedures for inventories in the aspect of existence. The first one is through physical observation. Auditors start by physically inspecting the inventory on site. They compare the actual items present with the recorded quantities in the company's records. Next is through counting and tagging. Auditors may participate in or observe the company's physical inventory count. They may also use tagging or marking systems to identify items that have been counted, helping prevent double counting. The third step is by documentation review. Auditors examine inventory documentation, including purchase orders, receiving reports, and shipping records to trace the movement of inventory and ensure accurate recording. Next is by confirmation. Auditors may confirm account balances with external parties, such as suppliers or warehouse personnel, to independently verify the quantities reported in the company's records. As for the fifth step, which is cut-off procedures, auditors review transactions around the inventory cut-off date to ensure that items are included or excluded from inventory at the appropriate times. Next is through analytical procedures. Auditors use analytical procedures to assess the reasonableness of inventory balances, comparing them with historical data, industry benchmarks, or other relevant metrics. Consequently, obsolescence and valuation assessment is also one of the audit test procedures for inventories in the aspect of existence. Auditors evaluate the potential obsolescence of inventory and assess whether it is valued at the lower of cost or market value, ensuring compliance with accounting standards. Last but not least is by testing internal controls. Auditors assess the effectiveness of internal controls related to inventory management, ensuring that the company has appropriate processes in place to safeguard and accurately account for inventory. By employing these steps, auditors aim to provide reasonable assurance regarding the existence of inventories in the company's financial statements. That's all for me. Thank you.
Hi, my name is Nur Azura Balqish. I am going to present the audit process on occurrence for the item revenue. The first step is to examine contract, which by reviewing the contract to verify the existence and assess the terms, which will ensure that they are properly authorized and executed. Next is confirmation. The auditor will independently confirm the existence and terms of contract with selected customer directly. Next, shipping and invoicing. The auditor needs to verify that the good or service have been shipped or provided as per the contract terms and ensure they are accurate and timely invoicing. The next step is revenue recognition policies. By evaluating the company revenue recognition policies to ensure compliance with accounting standard and that the revenue is recognized at the appropriate time. Next is sequential numbering. The auditor needs to check sequential numberings of sale order, shipping document, and invoice to identify any gaps or irregularities that may indicate missing the transaction. Third-party agreement is the next step. If applicable, verify the agreement with the third party, for example, the distributor, to confirm that revenue is correctly recorded and reported. Next step is customer acceptance. Assessing customer acceptance of good or service by examining documentation or communication confirming their satisfaction. The last one is reconciliation. Reconcile recorded revenue to supporting documentation such as sales contract, purchase order, and delivery receipts. That's all from me. Thank you.